Welcome back to the Money Script podcast. It's your host, Yohance Harrison, or Yohance, or Yo. Y'all know how it go. So happy to be here with you. I'm going to jump right into it. We're going to skip current events because we'll talk about current events later. But I have the unique honor and pleasure to be here with my good friend and associate, Mr. Will Gholston. Will, how are you?
I am doing great, yo. I hope you are as well.
Man, I'm doing really
Thanks for
good. I'm
having me.
doing really good. We're going to do it just like a typical Americans that are just having a conversation. How's the weather there in North Carolina?
The weather has been good. It's been good. We're entering into a cold spell right now. So today is supposed to be, I think, in the 60s. Tomorrow is supposed to be 47.
Oh, okay.
So it was 80 something yesterday. So it's a little bit unpredictable, like the markets can be sometime. But and we had a big thunderstorm last night, which our internet's been spotty. So, but thankfully, I've been, it's been restored. So we're able to be here today on this podcast.
Okay, so just in case he just freezes, we're going to give him a second because we know how that infrastructure can be in these United States of America after a storm. And I know it just as well. So basically, North Carolina, what I've learned, just gets Dallas weather 2 days later. So it was almost 90 degrees for us a couple days ago. And this morning was 55. So
Wow.
yeah, so now they're going through the same thing, and it came with a storm. That's kind of how this happens. Speaking of storms, so for those of you, if this is your first time listening to the Money Script podcast, both Will and I are financial advisors or financial planners. The terms are interchangeable for Money Script Wealth Management. Yes, it's the firm that I talk about all the time. I have another team member on the podcast for the first time. Shout out for that. Well, I can't say that because Alicia's been on the podcast. And she is a team member, but she kind of also lives here. So Will doesn't live here. He lives in North Carolina, as we mentioned. So this is my first time having another advisor from the firm on the podcast. Shout out to that. There it is. Put that one on all your Instagrams and stuff. So as I was saying, speaking of storms, this is a between two advisors conversation here. Can we talk a little bit about the storms that we are facing in the markets right now? Or
Let's
not
do
just the
it.
markets, the economy in general.
Let's do it.
So let's start with the one that we talk about every time, inflation. So Will, you've been at this what, 20 something year, 22 years
Yes,
in
yes, I
financial
have.
services? So do you remember the last time inflation was this high?
I do, and it was near the beginning of my career. I think I was in my 20s back then. So no gray hair back then. But I mean, I preach the same thing that I preached back then in terms of, current events in the market and whatnot. What does it mean for long-term investors, et cetera? In my previous firms, we spent a lot of time talking about whether it's going to be a recession coming up, when is it going to happen, et cetera. And at the end of the day, it's all about, long-term investing and maintaining the mindset and the discipline to continually invest in the markets that's generated a more than adequate return over time to help people achieve their goals. So I don't get too caught up in like what's the predictions about what's going to happen. Is inflation is going to go down, it's going to go up, etc. But to your point, I mean, inflation has come down significantly since June. I mean, it was up over 9% in June, and then now it's 6%, I believe.
I think it's at 6. I think, yeah,
Yeah,
the last read
yeah,
was 6 and some change, I believe.
absolutely. So it's come down quite a bit. So it's that's a good thing. That's a good thing, and hopefully we can get back to some state of normalcy from an inflation standpoint. But and speaking of storms, there's always going to be a storm on the horizon from an economic or market standpoint.
Always, always.
Yeah,
That's my favorite story to share with clients, prospective clients, and here on this podcast is that it's always something.
always.
Always, always something. And the one that's come up most recently, we've had some questions come into the office about the failure of the U.S. dollar. Is our dollar going to fail? There was a news story that China and Brazil are going to stop basically going to the dollar as they trade. into for their goods and services. But what's interesting is that they're not the first country to do this, but it is sparking that fear. And clients are asking, should I be putting all of my money in gold? Should I be putting it all in silver? Should I be putting it all in Bitcoin? And quite often the answer to that is no. Actually, I don't believe you should put all of your money into any one type of investment. As Will was saying earlier, diversification is key. But I'm just curious, Will, since you have a little bit more experience in the asset allocation, asset management world, how do economists, how do they react in times like this?
Well, economists usually react, with, it spans this full spectrum of dire predictions and, and Goldilocks predictions and whatnot. But I'm more interested in what thoughtful investors,
Hmm.
how they respond to it. And I harken back to my days. I was actually in 2007. I was the director of asset allocation at a large financial institution. And I remember 2007, 2008, the market highs were, of course, in October of 2007. The market, essentially, September of 2008, was kind of the beginning of our quote unquote downfall. And I remember sitting in our investment committee meetings. I had the chief investment officer at the head of the table. We had the director of equity, director of fixed income around the table. And many of those investors, were, even though they were experienced, were kind of panicking. And we were, it was an asset allocation meeting, and we were trying to determine what to do. And many people were saying, "Hey, let's just go into fixed income, you know,
Hey, hey,
and get some yield, just wait for this thing to blow over." And I was of the mindset, I think there has never been a more attractive time to invest in stocks. Like the last time I checked, you buy low, you sell high. Stocks were low in September 2008. I had no reason to believe that the most valuable, innovative companies in the history of the world were somehow going to stop being that for all time going forward. So like interest rates are lower than they've ever been
hmm.
once the Fed did what the Fed did to respond to the crisis. Those stocks are cheaper than they've been in a very long time. Like we're going to look back in 10 years and say, like, why wouldn't we have been gone completely aggressive with regard to stock investing at this time? And lo and behold, a year after the lows in March of 2009, the market was up 70%.
Mm.
You fast forward a couple more years, the market's up 200%. From the bottom. So it's you buy low, you sell high, and this thing, I've been in rooms with a lot of different types of investors on the institutional side and et cetera. But at the end of the day, it's just not that complicated. You buy low, you sell high. You just weather the storm. You stay in the market. You keep investing consistently. And what I've always said, like my role as an investment professional, as an advisor, is not necessarily my primary role is not to beat the market. I spent 20 years trying to add a basis point or two to the S&P 500, right? So I know all about trying to beat the market. And but my primary responsibility to my clients is to, number one, make sure your portfolio remains aligned with your goals. And as those goals change, making sure it continues to stay aligned. And number two is preventing the big mistake. You read Nick Murray,
Hmm.
the new financial advisor, preventing the big mistake. The big mistake is not selling
And
low.
so let's pause there for a second. So the big mistake. A lot of you may not have heard of the big mistake because it comes from a book written by Nick Murray. Nick Murray is like the financial advisor's advisor. He's kind of like the Kitsis. I'm gonna do that again because I mess up his name too often. He's similar to today's Kitsis. There, I did it. Uh, it's a tough one for me every time. But Nick Murray wrote a book called the New Investment Advisor. Actually, I think it was the Investment Advisor and the New Investment Advisor, and then he wrote the New Financial Advisor. I think that's the one we're quoting right now. And he has a periodical that a lot of advisors subscribe to. I was fortunate enough that I saw Nick Murray live in 2002, which was very early in my career, and it had a lot to do with my foundational beliefs as a financial advisor. Well, with that, Will, I'll let you pick up. So the big mistake by Nick Murray is known as what?
The big mistake is selling when stocks are low and buying when stocks are high. So basically, the big
Mm,
mistake is panicking when things hit the
panicking,
fan. And
panicking. Let's
it is,
insert. I have something that I can share with you here. Let's insert this Carl Richards drawing.
yes, the big mistake is selling when stocks are low and buying when stocks are high. And it occurs when people panic. And the problem with that is, things are always hitting the fan with regard to markets. And there's so many opportunities to make the big mistake. And that is a recipe for underperforming and not achieving your goals with regard to markets.
So we have here a simplified version of what Will was just speaking to as the big mistake. Our good friend Carl Richards, he was a columnist, excuse me. I would guess maybe more of an artist for the New York Times, and he did several drawings just like this one. And as you can see, he's illustrating that when stocks are high, it drives people to want to buy things out of greed. Like, oh, everyone else is making money. I want to make money too. But then when it goes down, that's when they, out of fear, they decide that they're going to sell whatever it was because, oh, I got onto the GameStop, you know, craze too late. And now I've lost so much money. And then repeat that until they're broke. Funny story, speaking of this, there's also times that are somewhat counterintuitive to that message. For instance, I got a call from a good friend who said, "Hey, we just purchased some shares in which bank was it? Republic, First Republic Bank, and this is right after the SBV collapse. What do you think?" And my immediate response was, "Get the hell out of there." Okay, and it was really just from a perspective of yes, it was low, maybe a good idea to buy some. However, the day they purchased it, the shares went up by like 30 or 40%. I said, I mean, in my opinion, you got to go. You did it because you were gambling. You won. Unfortunately, they did sell right before shares fell by another 50%. Okay. So even though, as we speak of this, the big mistake of buying when it's high and then selling it when it's low, you also got to be careful about just speculating out there in the market without a plan, without goals. Because if your only goal is to make money, it's not something the stock market is not a place that makes you money overnight. Okay. It's not supposed to be an exciting thing to do to be in the stock market. That's just not the stock market long term. So again, just to go back, remember Will said something very important about investing and your portfolio. Is it tied to your goals? Is it tied to your values? Are your values and goals in alignment with your financial behaviors? And that's what we want to help people do as financial advisors, is bring alignment between their goals, their values, and their financial behaviors, and not just investing just to make a quick buck, because it's probably not going to happen. Though we all know people who have done it. I made the big mistake of gambling essentially in the stock market. Back in 2008, as you mentioned, I decided, oh, WAMU, Washington Mutual, they're on every corner. They can't really go bankrupt. I'm going to buy some shares.
Yeah, I mean, everybody has made the big mistake. Everybody has made it, from Warren Buffett to just your newbie investor out there. If you're a human being, then you are prone to make the big mistake. That's why having someone to hold you accountable is extremely important. When you're living inside your own head, a lot of things sound like good ideas that are not good ideas.
When you're living inside your own head, a lot of things sound like good ideas. Is that a Willism there? Is that
I,
that's
I think it is. I think
it
that
is?
was
Yeah,
my
we
first
okay.
realism on Money Script podcast.
Yeah, let's we need to have. Oh man, I'm playing that one on the loop. When you're living inside your own head, a lot of things sound like good ideas. You're right, man. And it's not until a little bit later you're like, man, that was a bad idea.
Yeah. I mean, I just find sometimes that when I'm forced to say something to another human being, then it makes me see, what I'm saying or what I'm thinking about from a different perspective. I don't know if it happens to you, but I'll have an idea in my head and it sounds like the greatest idea that's ever been thought of and whatnot. And the first time I try to explain it to somebody, halfway through the sentence, I'm like, this is a bad idea. Like,
Hey, I will tell you, no, that's happened with our relationship since you've been a part of the firm because being a solo advisor, a lot of things just lived in my head. And then when I start rationalizing them to you out loud, I'm just like, that makes no sense. I'm like, tell me a better idea because I think you have one. So I appreciate that. And that is the beauty of when like-minded individuals can come together. And I encourage that to our listeners because I know we're a bunch of financial advisors, we're two geeks and nerds just having these financial conversations, but we're trying to bring it down to your level where if you're not as familiar with some of these terms, you can at least ground yourself in some simple things like goals, values, and your financial behaviors. So I encourage you as you're listening or watching. For those of you on YouTube, I'm used to being a podcaster. I've just been saying listen. So I love you guys too. Um, but surrounding yourself with other like-minded individuals and saying some of these things out loud. Okay. Because who knows? Maybe you're having a conversation with someone, with a friend, and you tell them about this great idea you have of making a bunch of money on a stock you know nothing about. And maybe they're the one to say, well, maybe you should talk to somebody about that. Okay. Because there's so much that you can lose. I meet so many people that were scarred in 2007 because that's when they started their investment journey. So they didn't start in 2002 in the last recession. They didn't start investing until 2007 after everyone had made money in 03, 4, 5, and 6, and then 7. And then what happened to them? 2008, 2009. And they were scarred because they lost, and some people lost 50 to 60% of their portfolio because they were chasing all the high growth names right at the wrong time. I'll admit I have a portfolio that I designed in 2017, started investing in it, and it happened to have all the names that went up crazily during the pandemic. I didn't expect that to happen. It just kind of happened. But I'll tell you, there are clients where I had to have the conversation like, hey, we thought these were great ideas in 2017. I still think they're great ideas now. Yeah, it was painful to watch it go up and come back down. But if they've been investing in that same portfolio long term, they're actually still doing pretty good. But if
absolutely.
you, yeah, but if you got in that portfolio in March of, or let's try February of 2020, oh man, that was a bumpy ride. However, if you got into it long term, this is only the beginning. This is the first year or two of a 10 plus year journey. Give it time. It's not supposed to happen overnight.
Absolutely. And
Man,
one of the things that I've learned in my career for sure is that you don't actually lose money until you sell.
it's so true. It's so
Yeah.
true. And people ask me, so should I do something here? I'm like, well, do you need the money? Now, don't get me wrong. Maybe there are some ideas that you had in your portfolio that you just don't believe in anymore. Again, going back to values. Maybe you decided, you know what, I really don't want to own that oil stock or that gun stock or that tobacco stock. Those are the top ones that I hear. Or I just want a portfolio that's more in alignment with things that I believe in. Not that you don't believe in those things or their ability to make money, but you're like, no, I just would rather have my money somewhere else. Or maybe you want to get out of individual stocks and go to something that has more diversification like ETFs or into funds. So it's okay to walk away from something, but don't go from something to just nothing, like just to hell with the whole thing, it's never going to work. No, it will. It just takes time. Sometimes the best thing to do is nothing.
Yeah, and absolutely. And I'm not the person who invented this statement, but as they say, It's not about timing the market, it's time in the market. And yeah, it's time in the market. So just remain invested in something that is diversified, just in alignment with your goals and values. And generally, historically speaking, you're going to be more than okay. Um,
More than okay. More than okay. We're just two advisors having a conversation on the Money Script podcast. If you're just joining us, which is kind of tough to do because this is a podcast or a YouTube, but maybe you were somewhere and it was just playing in the background and you started listening. We're at Money Script Wealth Management. We help clients make better financial decisions with their money. These are the two advisors that are on for the company, for the firm. It's myself and my good friend here, Will. So we've been talking a lot about well, I won't say common, excuse me, current events, and really just helping people to take a broader lens on what's going on and thinking about their long-term goals, what their values are, getting their financial behaviors in alignment. I want to transition here and just let's learn a little bit more about Will, because this is the Money Script podcast. So we like to ask people about their money script, and we view a money script as just how individuals have developed their views and their behaviors and their relationships with money. And for many of us, it starts at a very young age. We're introduced to money very young, and it is implanted upon us by usually a adult figure, sometimes good, sometimes indifferent. So nonetheless, with that, we like to ask all of our guests what their first memory of money is. So Will, what is your first memory of money?
Absolutely. My first memory of money was going to Carowinds. I don't know if you've ever been. You had to have been.
Oh,
Yeah,
Carowinds.
of
I
course.
don't know if you've ever been. Okay, by the way, full disclosure, you got two Carolina boys here. So yes, I've been to Carowinds, dear sir.
So Carowinds was our big trip for the year. Every year, me and my younger sister, we loved going there. So our mom would take us there. And my father passed when I was 12. So it was just me, my mom, and my younger sister. I have two older sisters that are much older than me. They were out of the house by this time. So we would go to Carowinds, and on the way, my mom would always stop by the North Carolina State Employees Credit Union, our bank.
Oh,
To this day, it's
I
still
know,
our bank.
I know the NC Secu.
Yes,
Yes.
yes, indeed. And she would go in there, and we would wait in the car, and she'd come out with this little white envelope, right? In this little white envelope, and they still use those same envelopes today because I'm
To this
actually a
day.
member now, right? And and then we would go to Carowinds, and as soon as we get to the gate, she would take out that envelope. She would pay our admission into the park. And throughout the day, she would, whenever we wanted to do something, needed to eat, needed to get a snack, what have you, she would take out that envelope and pull out the money and pay for it. And she would always say, "Hey, once the money in this envelope is gone, we're done. We're done for today. This is all we have for the weekend, right?" And I still remember that. And my mom, she's really you know to me a financial guru, so to speak,
Oh.
because she raised four kids, by herself, and all of us went to college.
Mm.
My older sister went to medical school, and she did it all making less than $40,000 a year.
Your mom is a financial guru.
And
Shout out to mom's financial guru. I met her, by the way. She is an amazing woman.
oh yeah, thank you. But yeah, she somehow did. I'm still trying to figure out. I need to pull out a spreadsheet and just kind of figure out how that's even mathematically possible. But it all was based on the white envelope. The mindset behind that is just, I'm going to develop a spending plan. I'm going to have a budget, and I'm going to stick to it. Force myself to stick to it, no matter what. And I'm going to do this consistently, across time. And that's what enabled her to pull that off. And whenever I'm working with clients, I remember the white envelope from Carowinds. When we're developing spending plans, etc., the mindset that was necessary to be able to do that is the mindset that I try to instill in my clients.
Well put. Well put. Could not agree with you more. For something slightly different, favorite ride at Carowinds?
Oh, Thunder Road. Do you remember
Thunder
Thunder Road?
Road. Okay, okay. Thunder Road. Now, Thunder Road going forwards or backwards?
I like it going forward. I was slightly scared of the backwards, but forward was my favorite. But I was clinching onto the railing when we started going backwards. But I think that right the last time I was at Carowinds, they had refurbished it, I believe, and it was still
I
there.
hope so, because
Yeah,
Thunder Road was a thundery road, partially because it was built out of wood. So this is
yes,
an old wood, very tall roller coaster. One of those clink, 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 clink. It takes you like 3 minutes to get to the top, and it always pauses right at the top long enough for you to wonder, well, is it going to happen? Are we stuck here? And
yeah.
believe me, there were many that got stuck at the top of Thunder Road. It happened at least once a week during the summertime. Someone
I'm
was
glad I
stuck
wasn't one.
at the top of Thunder Road. And then it would go down this big hill and had no loops or anything, just some hills. I have Thunder Road practically memorized. I rode Thunder Road so
Oh,
many times.
I loved it, man.
I did do it backwards. It took a lot of peer pressure to get me to do it backwards. I wasn't a big fan of not seeing where I'm going next. Um, but yeah, no, Carowinds was a favorite pastime of mine. It's funny, I have similar white envelope memories of Carowinds. I do. That is that was yes, that's growing up in North Carolina.
Do you
I
remember
also
the fresh squeeze lemonade they had at
fresh.
Carowinds?
I remember fresh squeezed lemonade. I remember funnel cakes. I remember Carolina Cyclone was
Yes,
the first time we had a ride that did the loops.
yes.
They had two loops,
It
two
was
of
two
them.
loops.
Yep.
I remember.
Yep. Carolina Cyclone. Yep. Remember that well. I'd always get on the swing no matter what. I was always getting on the swing that just twirled around. That was just, I enjoyed that swing. It went up pretty high. Oh, and I think it was called the gauntlet that just swung back and forth.
I never got
And then
on
when
that, man. I was too
oh
good. I was too
man,
good. My
that
sister
ride,
loved that ride. She loved it. I
I
never got on
loved it too. I loved it as well. That was one of my all-time favorites. All-time favorites. And it was just simple. It's just pendulum, and then pendulum goes all the way over. And it would pause also at the top just long enough, waiting for momentum to shift. And I was like, oh my gosh.
it. I love watching it though, just to see when it would flip.
Oh yeah.
Like it would get there almost, and then it would go back the other way.
Yeah.
And yeah, I used to love watching that.
Yeah, I remember. Didn't they had Hanna Barbera Land? Didn't they have that?
Yes, I
It
used to
was a
love
Scooby. It
that.
was a Scooby Doo ride.
Scooby-Doo little roller coaster.
Yeah, little Scooby Doo. I remember that young, and then I remember being old enough or tall enough, I guess, to get on Gold Rush. That was probably my first like real roller coaster was Gold
Yeah,
Rush,
yeah.
and then finally got the guts to get on Thunder Road, and after that I was a junkie. I was like, oh, give it to me. I even did the what was it Superman? No, we didn't call it Superman back then. It was Sky Zone, Sky Drop. I don't know. The one would just go straight up and drops
Yeah,
you.
yeah, yeah, yeah. That's a good one.
Yeah.
That was a good one.
Yeah, the first time when that ride was open, it was a school field trip, and we went there, and it got stuck, and we had students stuck at the top for I don't know, it probably was only 30 minutes, but for us it seemed like 3 hours. It wasn't me. I wasn't stuck up there.
30 minutes to be
I
stuck
was
on a
not willing
long
to
ride.
go on that ride at that time. I did not have the guts for that. And so I made all the excuses. What's the point? You only go up one time and drop. That's yeah. Yeah. Good
It's a
old
heck of a drop,
Carowinds.
though. A heck of a
It
drop.
is. And Carowinds, for the rest of you folks in geography world, yes, we know Carowinds shared the border with North Carolina and South Carolina. So it's kind of both of ours, but it was North Carolinian. It was ours. But I do remember walking that line. I'm in North Carolina. I'm in South Carolina. I'm in North Carolina.
Yeah, I
Good.
remember it well, man. I was amazed by that.
Oh, yeah. Oh, yeah. Well, thank you everyone for joining us on the Money Script podcast. We ended on a fun note talking about theme parks. So what's your favorite theme park? Let us know what your favorite theme park is. And in line with our first memory of money, what is your first roller coaster memory? Tell us. Hit us up on Twitter and at the Money Script. Hit us on our story on at the Money Script. At the Money Script, at the Money Script, at the Money Script. Will, thank you so much for joining us for the Money Script podcast. Thank you for sharing your story with us and just dropping some gems, because there were some good nuggets in this one, especially for our new investors. I won't even say new investors. Anybody, that's anyone who's an investor. There's some good ideas for you to think about with your own financial journey. And of course, if you need some help, feel free to reach out to us. We're here for you. Until next time. Thanks for joining us on the Money Script podcast. Be sure to check out our other episodes, subscribe, follow, and give us 5 stars. Continue to send your financial questions on Twitter or Instagram at the Money Script. Go to moneyscriptwealth.com and schedule your complimentary consultation to discuss your specific goals and concerns. Financial advisory and investment management services are offered by Money Script Wealth Management PLLC, a registered investment advisory firm registered in the state of Texas and California and other states where exempt. The Money Script LLC and the Money Script Wealth Management PLLC and guests of the episode may have interest in the investments mentioned today. The opinions and views are expressed here are for informational purposes only. This material is educational in nature and should not be deemed as a solicitation for any specific product or service. All investments involve risk and a significant loss of principal. The Money Script nor Money Script Wealth Management offer tax or legal advice. Please consult your tax advisor or attorney for specific advice about your situation. Until next time.